Welcome, everybody. We will go over some housekeeping, but I will actually get started fairly shortly here or very quickly here because we have a lot of material to get through today. And I will have to go necessarily fast through a little bit of this. So, a couple things of housekeeping just right up front is if there is anything in this presentation that you see on the screen and I'm not totally addressing it because I'm moving on to the next thing, certainly feel free to just type in the chat or raise your hand and I can unmute you or whatever. And one of the live methods of communication, and I can go back to it and readdress it. The other piece, though, is that all of these slides are accessible to all of you. We can send them to you. So if you want to use them as a reference to look at something I didn't dive into, and then we can have a one-on-one about it, great. Or if you just want to use them for your own reference, then that's great too. But I just wanted to do that housekeeping. So today we are going to talk about Medicare. I think most of you knew that. And we're going to talk a lot about some of the details of Medicare, some of the requirements of Medicare, and for people who are already on Medicare, some things to think about as you continue to move forward, if especially if there are changes that you would want to make. So to get started, I think most of you know me, but maybe not all of you. My name is Anthony Gerbi, financial advisor. I've been with Stein for a little over 10 years now, actually, which is kind of amazing. And I am by no means somebody who lives and breathes Medicare 24 hours a day. So it is possible that you will ask a question that I go, I think I know the answer to that, but I might want to double check. And I hope you will all just let me be humble and double check before I give you an answer that potentially I would need to revise later. So I'm not too proud to say that I don't know everything about Medicare. And I encourage you to ask whatever's on your mind. We're going to go through a lot of information, but if I have to look it up and get back to you, here's my disclaimer about that right now. So we do have a ton of info to get through. I'm going to do my best to keep my face out of the way of the text here as we go. And we're going to try to center the conversation today around three really key points, okay? And those points are, one, if you don't enroll in Medicare on time, you can have a penalty. Now, we're going to talk about all the rules surrounding when and how to get on Medicare. So if those are the things that are most impactful to you because you're not on yet, we're going to cover that. We're also going to cover key takeaway number two. If you don't get the right coverage to go with your Medicare, you could be paying more than you really needed to. And that goes into all the different parts of Medicare, the A, B, C, and D of Medicare. We're going to cover what all that means and hopefully give you a better understanding, if you're already on Medicare, of what the best, whether you're in the best place for you. And finally, if you don't plan for higher healthcare costs in your retirement, you could run out of money. Nobody on this call should run out of money. That's our goal, to work together to avoid that. Or you might have to sacrifice in the care that you're receiving. And that's not a good outcome either. So our first step is, this is really going to be most impactful for people who haven't signed up for Medicare yet, but it's a good refresher for everybody. And we all have friends and family. And by the way, let's say this as part of the housekeeping. One of the big misconceptions with Stein Financial Group and our group is that we only work with public employees. That's actually not true. We work with people from all walks of life. And if you know somebody who, you were saying, well, they can't work with Anthony because they didn't used to work for Hennepin County or whatever, feel free to send this to them. You're going to get a replay of this. We can get you the slides for this. If you know people who are turning 65 and having to make Medicare decisions, this is just a great resource for everybody. This is by no means specific to public employees. So just keep that in mind as we move forward. So we're going to talk about what is Medicare, who needs to enroll and when, and how do you enroll. Part two is going to be, how much does it cost? What do those costs change to over time? That's one thing we can look at on a year-over-year basis. What does it cover? What does it not cover? And when do you need to potentially add on private insurance on top in a so-called Medicare Advantage plan? Which I'm guessing, for those of you on this call who have Medicare, most of you probably have a Medicare Advantage plan. We'll get into what all that is. And then finally, we're going to talk about just how to think about what your costs are going to actually be going forward into the future. So all of that stuff will be today. As I said, we've got a lot of stuff to get through. So let me get started here. Who pays for healthcare in the US? This is just a reminder. I'm not going to spend too much time on this. Obviously, most people get their coverage through work prior to retiring. But after you retire and after age 65, Medicare kicks in. And so, what this really points out to me is if you're somebody who is yet to retire, but potentially wants to retire before 65, before you're eligible for Medicare, then we need to have a conversation about where your coverage is going to come from. There are options out there. If you're in Minnesota, MNsure, the public marketplace, is a viable option. But we need to talk about that and the costs associated with that in advance. That's not something you want to leave to the last minute. For those public employees, you have the option to stay on your workplace plan even if you retire before 65. That's often a great option. So then you don't even have to worry about the public marketplace. But just know that we should have a conversation about it. Here is a really important point, okay? So I want to pause here and emphasize this. It is not required for everyone who turns 65 to enroll in Medicare. And if you fall into this category, you don't even have a penalty to worry about, okay? Here is the answer to that question. Who does not need to enroll in Medicare when they turn 65? If you are covered by an employer healthcare plan, meaning you're still working and they have a group healthcare plan, and that plan covers 20 or more employees, right? So it's not a mom and pop shop, or it's not your own business where you're the sole employee. There's got to be 20 or more people covered. If all those things are true, you do not have to enroll in Medicare when you turn 65. You may want to, but you don't have to, okay? And I see a question right away. Does this include spouses of an employed person? It depends, but it can. Yeah, and I'll actually get to kind of a flow chart here, I believe, in just a second that'll answer that question directly. So the way that this is phrased on the screen is sort of the negative version. So unless you're covered by an employer group plan, you must enroll in Medicare. But just be aware that actually it is on this screen. I think my head might have been in the way. So the question from Julie here, coverage must be based on current employment of self or spouse. So the answer in general is yes, it does include spouses. So let me make that concrete. If I'm 65 and I'm not working, but my spouse is working and covered by a healthcare plan, and I'm covered under her healthcare plan, I don't have to enroll in Medicare. I might still enroll in Medicare. I can enroll in Medicare, but I don't have to. And the have to part of this has to do with the penalties for not enrolling, right? Because otherwise it's like, well, yeah, I don't have to have coverage. But no, unless this scenario is qualified, you qualify for it, not to mince my words, you will have a penalty if you don't sign up for Medicare, if you're not with an employer group plan or your spouse is, that covers 20 or more employees. Okay, we're going to get to pros and cons of waiting to apply for Medicare, so we'll get there, but that's just whether you have to or not. If you were a person who needed to enroll on time and you didn't, there are penalties. And your healthcare, worse than the penalties, by the way, is you might not be covered by insurance properly. And then if you have a healthcare event, you might be paying way more out of pocket because you're not covered by insurance. Also, if you're in that stage of life where you're not covered by a work plan, you're only going to have some limited options as far as buying independent insurance. So in other words, saying, I don't want to sign up for Medicare, I want to stay on MNsure, for example, and keep my coverage there. So I'm just going to ignore all these Medicare letters I'm getting. Not a good idea. Not a good idea for a couple different reasons, but especially not a good idea because of penalties and because of potentially a lack of coverage. So what is Medicare? By the way, I think that answered your question, Julie. Let me know if you want more clarification on that. But the answer is yes, it does include spouses, as long as all the conditions are met for the spouse that I just laid out for the individual. What is Medicare? Okay, most of us generally know what this is. One thing I wanted to point out here, enrollment is technically through the Social Security Administration. That's somewhat surprising to a lot of people because we view these things as separate, but they are intertwined in a couple of important ways, and we'll get to kind of exactly what that means. Who is eligible for Medicare? One thing I don't talk about a lot that we should talk about more is what happens if you're an immigrant to this country, right? You weren't born here, because all U.S. citizens are by default eligible for Medicare. But what if you weren't born here? What if you're not a citizen yet? Because if you complete your citizenship, then you automatically become eligible. Um, but legal residents who have lived in the U.S. continuously for at least 5 years are eligible for Medicare if you're over 65. And also, this is not super well known either, if you're on Social Security disability, you can be eligible earlier than 65 too. I'm not going to go into all those details because that would literally be another, a whole different presentation. But know that you are eligible, or you can be eligible, if there's a disability in play. But does it make a difference to choose A or B? Or I'm reading the question right now, or to enroll A or B to enroll in, or not via employment? Yes. Short answer is yes, and I'm going to get to A and B in just a minute here, probably. That'll help clarify that. So I'll bring that. I'll circle. Wow, look, here we are. This is, by the way, I'm going to move my head completely out of the way. This is one of the best visualizations of this system, which I think is a little needlessly convoluted, that I've seen. So genuinely, I would take out, if you're confused about this, or if you want to know more, I would take out my phone and literally just take a picture of the screen. Again, we can get you the slides. So if you want to just do it that way, that's fine. But A through D parts of Medicare are confusing. They all do different things, and they all cost a different amount. And I will walk you through all of them right now. So Part A, I think there's a slide that's going to talk about the cost, but I'm going to talk about it right here. Part A is hospital insurance, and I like the logo that they've come up with there because that's what it covers. It covers stays in the hospital. Part A does not cost you anything when you sign up for it, okay? That does not, and you'll hear this said, and it's wrong, it's not free. Part A is not free. You've just already paid for it out of your FICA taxes, your payroll taxes, okay? So you don't pay an extra premium for Part A. So this goes, Julie, to the second part of your question. Even if you're still working, you may want to sign up for Part A because it doesn't cost you anything more. And you can just get extra insurance for no added cost. Now, there is one downside to doing that. And again, another slide's going to talk about this. But if you have an HSA at work, a healthcare savings account, not an HCSP, doesn't matter if you have a healthcare savings plan, doesn't matter if there's a bunch of other savings plans for like a flex spending plan or things like that. None of those matter except for an HSA. If you have an HSA at work and you're still working and you're like, should I apply for Part A because I don't pay anything extra for it, or should I not? The answer is you probably shouldn't, because the one downside of signing up for Part A is that you can no longer contribute to a health savings account. Again, only that one, only an HSA. HCSP, healthcare savings plan, doesn't apply. You can still apply for Part A and still contribute to it. So I point that out because there are people who have HSAs who think, I should sign up for Part A of Medicare. There's no premium associated with it. I might as well just get a little extra coverage just in case my private insurance or my work insurance doesn't cover me totally. They'll kick in for a hospital stay at the end of that. And I'll get into how that works too, who pays what. But know that if you're doing that, you're disqualifying yourself from contributing to an HSA anymore. That could be a big deal. So that's something not a lot of people really know about. But Part A, you don't pay anything extra for. You've already paid for it. It's your hospital insurance. Think of it as your catastrophic coverage, so to speak. Part B is your medical insurance. And note, by the way, don't neglect these little orange bars, the one that's right above my head down here. That's really important. What this is provided by. Part A and Part B are both provided by Medicare itself, the federal program, Medicare proper. Part B is closer to like your coverage that you've had through work, meaning that's when you go see your doctor for physicals, outpatient stuff, when you go to a clinic. That's what Part B is going to cover. Part B is standardized. Okay. So you pay a standard premium based on your income. We're going to get to that a little bit later. But your deductibles, everything is standardized. Now you can tweak that via Part C. And this is where it gets confusing. Okay. Sometimes I skip over Part C and go right to Part D, but let's just do it in order today. Part C is called Medicare Advantage. And pay attention. Now, this is why this graphic is so good, in my opinion. And I didn't make it, so I'm not tooting my own horn. There's the hospital, the stethoscope, and the pill bottle. Okay. What does that tell you? That tells you Part C is actually a combination of all the other parts of Medicare. This is where it gets complicated. Part C, a Medicare Advantage plan, is offered through a private insurance company. It's what probably 80+%, maybe 90+% of you on this call either currently have or will have, because it's usually a good deal. This is the part that you shop for. Okay. This is the part if you want to go talk to a Medicare broker, this is what they'll shop for you for. And it's going to include Part A coverage, hospital coverage. It's going to include your medical insurance. And you're going to be able to shop for it like you do with your current plans, where I want a lower deductible, I want a higher deductible, I want this type of coverage, I don't want that type of coverage, that sort of thing. And it will usually include drugs. So it's your one-stop shop for Medicare. It's going to be offered by, if you're in Minnesota, Blue Cross Blue Shield, UCare, Medica, all the names we know from, private insurance, right? Those are the people who are jamming your mailboxes full of mail around this time of year when open enrollment starts. So Medicare Advantage it is Medicare, but it's like a substitute for all the other parts of Medicare. And it qualifies as Medicare, and you don't have to worry about, you're not going to get caught with a penalty because you circumvented the system. It's part of Medicare, but it's offered by private insurance companies. And this is why it's a little confusing. Okay. And I think, again, this graphic. And then Part D is probably the simplest one to understand, maybe tied with Part A. It was added most recently. That's why it's the last letter. And it covers your drugs. And you can get that through Medicare proper, but you usually end up going with a private insurer that you can get just drug coverage. So let's say you want just Part A, Part B, and drug coverage, then you don't need to worry about Medicare Advantage. And there's even a thing that we're going to get to called Medigap insurance, where you could add on top of those three. Again, complicated, but this is the best way of explaining it that I've seen. There are 4 parts of Medicare. 3 of them are very straightforward. Part C is not straightforward, but it's the one that everybody ends up going with because it's the one you shop for. It's the one offered by the private insurance companies. So this is another, again, literally, I would take a picture of the screen here. These are your options as far as what you want to do. You could sign up for Parts A and B, and you can add Part D to cover your coverage, and then you could potentially add a supplemental policy on top of that. So in other words, you're going straight through for Medicare for Parts A and B, and you're adding drug coverage, and then you're going to one of the private insurers and saying, hey, I want to just add a little bit on top, sort of a la carte style, because I've got this health issue and I need to make sure this procedure is covered or whatever. But Medigap, when you hear about that, it's literally to cover the gaps between Part A, B, and D, right? So then you're not on Part C at all. You're not in a Medicare Advantage plan. Option 2, which I would say is more popular, but your mileage may vary. It's about what's doing what's right for you, not what's popular, is a Medicare Advantage plan, which encompasses A, B, and D. All right. So this is, again, it's like the shell within a shell. Medicare Part C is A, B, and D, just customized to your liking through a private insurer. Most people, again, like that because you get to shop a little bit. You get to say, I want to stay in my network. I want to stay with my doc. You get to customize all that. So that's why people like it. But this, again, is a super visual way that I like of giving you the 2 options. You're going to pick one or the other of these primarily. There are some special circumstances where I'm not going to get into edge cases here, but in general, most people, you're going to pick one of these options. How do you enroll in Medicare? So let me make sure I kind of answered that question. It doesn't make a difference if you choose A or B to enroll in or not via employment. Does it make a difference? Yes. If you're still working, you're almost certainly not going to enroll in Part B. Okay. because you'd be doubled up on coverage. You'd just be paying an actual premium for coverage that you already have through your work. Are there reasons why you may sign up for Part B while you're still working? Yes, but they're rare. So you'd want to at least talk with somebody like me or a broker before you even thought about doing that. Do you sign up for Part A if you're still working? You probably do, unless you have an HSA, like I talked about. Then you don't. But if you're still working, you might as well sign up for Part A. I'm going to tell you, I'm going to mention this here again because this is going to get talked about in a later slide, but because I'm thinking about it. When you sign up for Part B, you are probably going to get, whether you're still working or not, or even when you sign up for Part A, even if you're still working, you might get prompted to sign up for Social Security when that happens. Okay. So let's say you're 65 and retired, you're signing up for Medicare. They might prompt you to sign up for Social Security, and they being like a Medicare broker. Why? Because you can pay your Part B premium out of your Social Security check. In fact, once you do turn on Social Security, that's how you will pay it. It happens automatically that way. However, me being in this industry, and I have personal experience because my mom was told to do this when she signed up for Medicare. If you're still working, or if you want to delay Social Security for financial planning reasons, you don't have to sign up for Social Security at the same time you do Medicare. And some brokers will kind of insinuate that you do. Again, personal experience here. So not all brokers, but some will insinuate, well, you should, because then your premium will be covered and it's just more money. You don't have to do that. And in a lot of cases, it doesn't make sense to do that financially. And that's where somebody like me can come in and help you actually figure out whether it makes sense to do that or not. So don't just get sucked in on the idea, well, I'm turning on Medicare, I have to turn on Social Security. Absolutely do not. Sometimes it's convenient to do that. Sometimes the brokers like when you do that because then they're like, well, you're not even netting a loss here or a payout because you're getting more money in. But whether it's right for you to turn on Social Security when you start Medicare is a totally separate question than when you turn on Medicare. Okay. So a little bit of a soapbox there. All right. How do you enroll in Medicare? If you're receiving Social Security already, then Medicare Parts A and B are automatic. You can decline if you don't want Part B, meaning if you want to go on a Medicare Advantage plan, that's all part of that process. Coverage will start the first month you turn 65. This is, again, if you're already retired and receiving Social Security when you turn 65, okay? Part C and D are not automatic. You have to elect those. Don't worry, for those of you who are on Medicare, you know your mailbox is going to be full of people telling you exactly how to do that and that you should do it with them. So you're going to get plenty of resources on this. If you are not receiving Social Security when you turn 65, you have to sign up through a Social Security Administration during a Medicare enrollment period. Okay, this terminology bothers me because it's more simple than it actually sounds here. Initial enrollment period. Basically, what that means is when you leave your job that was covering you healthcare wise, that's an enrollment period. You get a special enrollment period. That's actually the second option, the second bullet point here, but that's the first way you're going to do it. So if you're 65 and you're retiring from your job and you're not yet on Social Security, when you retire, you are going to get a special enrollment period where you can sign up for Medicare. And you want to do that proactively so that there's not a gap in coverage, but it opens a window. It doesn't matter what time of year it is, you get a special window. If you are not working, but also not on Social Security, then it's just your birthday. Initial enrollment period is when you turn 65. And you want to be, again, a little bit in advance so there's no gap in coverage. Like 3 months is usually a good rule of thumb. A general enrollment period is what none of you should be doing, which is basically if you missed either the time right after you left your job that had coverage or you didn't sign up right away at 65. Again, that's usually meaning you're going to have to pay a penalty. None of us want to deal with that. So don't even think about general enrollment period. You're going to do one of the other two because that's the better way to go. When your coverage starts, if you're curious, I'll linger here for just a second. This is kind of just trivia to an extent. Before the month you turn 65, it's the month you turn 65. If you sign up the same month you turn 65, it won't start till the next month. So don't let there be a gap in coverage. If you wait till after you turn 65, which might not be a penalty because you do get a window to do this, but you're still going to have to wait for the coverage to kick in, which is never really good because then you're really taking a big risk that you're not going to have a big healthcare event in that window, right? So who signs up for the Part A during the initial enrollment period? Almost everybody, unless you're covered by a workplace plan and you have an HSA. Okay, this slide breaks down what I've already told you verbally. So if you're more of a reader to learn this stuff, this is the slide for you. Okay, and again, feel free to just take a picture of this, or we'll get you the slides afterwards. But if you don't have an HSA, there's probably not a downside to signing up for Part A, so you might as well. That's my general advice. Again, situations are specific, but just know that there's not much of a downside other than that HSA point. And by the way, if I'm going too fast at any of this and you want me to go back, just send it in the chat and I'll either go back at the end so we can look at it, or if it flows into what I'm going to talk about next, I'll go back when I'm talking about it. Who signs up for Part B during the initial enrollment period? People who are not covered by a group plan or have a spouse who are, and they're getting their coverage through a spousal coverage. That covers 20 or more employees when they turn 65, i.e., this is just a list of people who are not working, people who are self-employed, people who are employed by a company with fewer than 20 employees, people who are on COBRA. COBRA is what you're eligible for once you leave a job. You can continue your healthcare coverage for 18 months. If you worked for a Minnesota municipality like Hennepin County, you can actually keep your healthcare coverage after you retire without having to go on COBRA. And that would kind of file under the receiving retiree healthcare benefits, I think is what bullet point that would file under. Or because you want to, this is the bullet point I want to highlight, the very bottom one here. Let's say your group employee healthcare plan sucks. Okay. It's bad. It's been bad for years. You don't like it, but it's your only option, so you take it. Well, maybe even if you're still working, you do want to apply for Part B here, because then it's going to add on extra coverage on top, and that might actually help you out. So that is a totally valid option to do if your coverage is bad. Okay, so I don't want to minimize that. When do you sign up for Part D? D is for drug, again, remember. People have signed up for Parts A and Part B that want prescription drug coverage either now or in the future. You must sign up when first eligible or face a late enrollment penalty unless covered by a plan with drug coverage at least as comprehensive as Medicare, called creditable coverage. Okay, what does that mean? That means when you sign up for Part A and Part B, even if you're like, I don't really have any prescriptions right now, so I think I can forego Part D, you got to be covered by something. Or if you want to enroll later, you could face a late enrollment penalty. That's what this means. So you want to be proactive about that. That doesn't mean you need to get the Cadillac of Part D policies if you're not on any prescriptions, but you might want some coverage in case a prescription need does arise. Okay, and then you won't have to worry about any issues here down the road. Special enrollment period. Okay, what does this mean? This is for people who did not sign up for Parts B and D during their initial, I'm literally reading the screen, because they were covered by work. So you were still working, you were still covered by your work plan. You only signed up for Part A because you didn't have an HSA, so there wasn't any reason not to. Once you leave your job, you get an 8-month window from the day your group coverage ends to sign up for Medicare. Don't wait till month 7. You won't pay a penalty if you did, but then you're going to lose out on coverage potentially for 7 months. Unless, you're going to go COBRA in the interim, and that's almost certainly not going to be cheaper. So I'm not going to play hypotheticals right now, but would there be reasons? Potentially, probably not going to be in your best interest though. Sign up for Medicare so that your coverage starts basically the day you walk out of work or the day your old coverage ends. That's what I'd recommend. And same deal for, you could see the extra boxes for Part B versus Part D there. So special is automatic when you leave the job that was allowing you not to have to take Medicare in the first place, in a nutshell. When's the best time? Sign up during your initial or special. So initial meaning when you turn 65, or special meaning when you leave the job that allowed you not to sign up for Medicare. Sign up right away. Don't wait. Don't let a gap in coverage happen. Sign up before the current coverage ends. A good rule of thumb, 3 months, right? You could do it the month before and make it work, but you want to give yourself time for this and be proactive about it. If you're starting the process 3 months from when you're going to retire or turn 65, that's good. And I do recommend, by the way, that everybody who is questioning this talk with a broker, a Medicare broker. I don't think there's a slide that really goes into that here, so I'll talk about it now. they're great for just letting you know what your options are. You don't have to work with them. You could do it on your own. But the one thing you should know about Medicare brokers is you don't pay them. They make a commission. Don't get me wrong. They get paid. They make a commission from the insurance companies for when they point someone towards that insurance company's product. So keep that in mind when you're talking to them. If they're like, I hate all other covers other than Medica. Well, maybe that's because Medica is paying them the most, right? I don't want to assume bad things about people, but you got to be cautious these days, right? But if they're worth their salt, they're going to shop around for you and figure out what's the best option for you in their mind. And that can be really helpful, even if you don't end up going with their recommendation, just to see what's out there. So it doesn't cost you anything. It costs you time, I guess you could say, but I do think it's worth it. And if you are in that stage where you're like, I'd like to talk to somebody, I'd like to see what's out there, let me know. And we've got some names that we've sent people to before that they've just loved. That's not me. I'm not a Medicare broker, but we have some resources that we can send you. So stick that in the chat and we'll make sure we follow up with you on that, or just send us an email. You don't even have to put it in the chat if you want to just contact us directly. All right. So general enrollment period. This is the one that I hope none of you actually have to deal with, even though you can do it without a penalty. If you miss the initial enrollment period, meaning you didn't sign up when you were 65 and you didn't sign up in a special enrollment period, you can sign up during the general enrollment period, which is January 1st through March 31st. Remember, this is just enrollment, not renewal, because some of you are thinking, well, open enrollment is going to come up here in the fall here. Yes, that's for once you're already in Medicare. But the first time, there's this general enrollment period. Just so everybody knows, again, I'm not going to spend a lot of time because this shouldn't be the way you do it for the most part. Coverage starts the month after you enroll, just factual information there. So a review. The general enrollment period, I'll move my head over there so you can it's emphasized, is for people who missed their initial enrollment period. Well, if you missed your initial enrollment period, I hope the only reason was you were still working, which means you have a special enrollment period. So you really should be only in one of these two, okay? One of those two options. And if you need any help clarifying this, let me know. This is another, by the way, I'll make myself a little bit smaller. This is just quick facts of what we just spent, 20 minutes talking about. So a good thing to take a quick picture of, again, if that's you. So I'll give just a couple minutes while we do that. But sign up ahead of time, sign up on time, and sign up for the right parts of Medicare. That's the trick. That's what everybody worries about doing correctly. And once you get your arms around it, it does make a little more sense, I promise. It seems very intimidating at first, I get that, but it will make sense once you kind of just eat it a bite at a time, right? Take in one piece of information at a time, add it, and then you'll get there in a cumulative way. So how do you sign up for parts A and B? Because those are offered by Medicare proper, you can just go to ssa.gov, which again, Social Security Administration is how you sign up for it. Counterintuitive, but that's how it works. And hit apply for Medicare benefits or give them a call. I have not done this because I'm not on Medicare. I have heard fairly good things about the online portal. You get mixed things about the phone number. Usually if you can get to a good person, good things happen. While you wait on hold, while you get them to call you back, if you happen to get to a person who's maybe not as good, then it can be a problem. So your mileage may vary here, but those are the ways to do it. How do you sign up for Part D? Okay, Part D, again, before you sign up for Part D, you need to decide if you're going the Medicare Advantage plan route, because that will probably have drug coverage included with it, and then it's a one-stop shop. But let's assume you're not. Let's assume you're going with original Medicare. Then you can go through Medicare directly at medicare.gov or call 1-800-MEDICARE, okay? And again, all this stuff, we can send this to you after, so if you want to take a quick picture or just write it down or just look at this as a reference later. So let's talk about how Medicare and private insurance interact a little bit. And there's some really technical stuff in here that I'm going to go over quickly because it's kind of edge cases. So don't, be offended if I'm moving on fast. And if you want me to go back, just let me know. First off, what does the average person pay out of pocket even while on Medicare? It's $5,460. Now that's an old number from 2016. I actually have some more recent ones coming up later, but don't expect that you're not going to pay anything out of pocket is my point here. You're going to pay premiums and you're going to pay for copays and services just like you probably do now. Don't get me wrong. It's not going to be anything new, But by no means is this just, well, my days of spending on healthcare are over. I just pay my premiums and everything's covered. No, there's still going to be out-of-pocket costs for you. So out-of-pocket costs paid for by Medicare beneficiaries. If you pay your premiums, you pay Part B premiums to Medicare. This stuff is all pretty simple. That is what I just said. Deductibles, your portion of your bills that aren't paid by Medicare, you pay. Services not covered by Medicare. Don't let yourself get in trouble there. Make sure that what you need to have done is going to be covered by Medicare, because it's not a guarantee that it will be, right? Even a Medicare Advantage plan. And here are some, by the way, this is the costs section. Again, I'll go quick through this. Part A, as long as you paid into Social Security for your full 10 years, meaning you're eligible for Social Security, you don't have to pay in for Medicare. But it's over for Part A, for Part A, because you've already paid it is the reason. But if you happen to be an immigrant or you don't have 40 quarters or 10 years of Social Security pay in, then you may potentially have to pay, and it counts if a spouse too. So if one of you stayed home with the kids, if your spouse is eligible for Social Security, you're good. But this is mostly applicable for like immigrants potentially, who don't have work history here. Know that you need to get your 40 quarters in, or you could even pay for Part A potentially, and not necessarily cheap either. So know that ahead of time. Part B has a set cost that can be adjusted based on your income. I think the next slide deals with that, so I'll talk about that there. And in Part D, you're going to pay to your whoever covers you, whatever premium you've agreed to there. If you have a light amount of coverage, it's going to be a lower premium. If you have extensive coverage, it's going to be a higher premium, but it's variable is the point. So let's talk about this. This is one of the most important things for people who are on Medicare currently, okay? And this is usually something that you don't think about until it comes up and surprises you. What are we looking at? We are looking at the income brackets for Medicare Part D. Did you know that if you earn higher income levels, you could be paying more for Medicare for the same Part B coverage that everybody does, but you have a premium increase built in? This is called the 2-year look back, okay? And they, of course, because they make it as complicated as possible. What does that mean? When you sign up for Medicare at 65, and let's say you go on Part D, excuse me, not Part D, Part B, although this does apply to Part D as well. Medicare is going to look at what your modified adjusted gross income, which is one of the things you file in your tax return, that's what MAGI stands for, was 2 years ago, okay, when you were 63. And where that comes in, depending if you file single or joint, I'll move, this section is what I'm looking at right now, is determines if you have an extra bump in what your Medicare premium is every month. The more income you earn, the higher the bump is. Somebody who is single and who made more than $500,000 2 years ago is paying about $500 a month more for the same Medicare as somebody who was under 100,000. Now, again, if you're making more than $500,000 in a year, you can probably afford that. But where this comes into play for me is, let's say you're a joint couple and your modified adjusted gross income, because I help you look at your taxes. This is one of the reasons we do the tax analysis we do. Your modified adjusted gross income comes in at 200,000. Well, if I look at this little chart here, that means if I had 6,000 more in income for 2 years ago, that would put me over the next bracket, and I'd be paying an additional, $75 a month for Medicare. Well, my job as someone who helps you navigate your finances is to help you, if at all possible, stay under these brackets while still accomplishing your financial goals. So it could be the simple difference of, do we want to take money for this purchase or this trip that you're taking from your IRA or from your Roth IRA? Well, the big difference there is that's counted differently for tax income, and that could keep you under the next bracket for Medicare, right? And it's tricky because they look 2 years back, so you got to be proactive about it. It's a convoluted system, but it's something that, for those of you who work with us, this is one thing we look at for you. For those of you who don't work with us currently, working with somebody, a financial advisor, that's what we can help, is to navigate this where you don't have to think about it. We think about it for you. Okay. But know that your income can make you pay more for Medicare. Now, you can file this under sort of good problems to have, because the more income you make, the more money you have. You can potentially afford this, but why pay more for the same coverage if it could have been avoided? That's my point here. Deductibles. Now, because Part A and Part D are actually standardized, we can get a sense of what their deductibles are. And, Part A, and this is actually not the best way to put it. I think they talk about hospital stays, co-insurance, how much you pay. I'm going to go quick through this because I would file this under trivia. It's important, but it's sort of, you need to look at it on a case-by-case basis. But Part B, you're going to have the 20% co-insurance, which is fairly standard for, like the group plans that you're all used to from your working days. So it's not going to shock you what it is, but this is where these out-of-pocket costs come from. Same thing with drugs, but know that the drug plans vary much more widely than the Parts A and B do, okay? Parts A and B are fairly standard. D can be wildly different depending on what drugs are covered, you can customize it basically. What does Medicare cover? This is one of the most common questions. Part A, you're going to get 100% of your first 60 days in the hospital covered. Okay. Now, if there are services that are happening while you're there, there may be out-of-pocket costs for some of that, but just the hospital stay itself is what's covered. Beyond that, you can get some coverage, but you have to qualify for it basically via, what's actually going on with you. Medical services in general, 80%, Medicare covers 80% of the Medicare approved amount. So it's similar. They have to approve the procedure or what's going on for them to cover it, but they'll cover 80% of it then. And then preventative services, very similar to what you'd expect. Flu shots, screenings, you got to dig into kind of the plans. If you go the Medicare Advantage route, you'll have maybe even a clearer picture of what that is, because you'll customize it to how you want it to be. But it's going to be comparable for the most part. What Medicare does not cover, everybody look at the top line here, long-term care. Unless some very specific circumstances are met that almost nobody is going to actually qualify for, you're not going to get a dime of long-term care money out of Medicare, okay? Not even a Medicare Advantage plan, right? That is a totally separate type of insurance that we have a conversation about separately. In fact, we did an event specifically on long-term care earlier this year. And if you'd like to look back at that as a reference, it's on our YouTube channel, which is if you just search Stein Financial Group YouTube, we should be the first thing that comes up. It's got a lot of our old presentations. This one will go up there at some point once it's all uploaded and everything. But know that Medicare is not going to cover you for long-term care. It's also probably not, unless you have a really fancy Medicare Advantage policy, going to cover you outside of the U.S. You might be able to add that on as like a bell and whistle kind of, but you're going to pay for it. And don't expect it to be very extensive if you do. But regular Medicare doesn't cover it at all outside the US. Dental and vision, you're going to have to do separate policies for that. That's usually part of the Medicare Advantage process. When you sign up for the private insurance, if that's the route you go, you add those on. That's going to be additional costs though. A couple other things, cosmetic surgery, acupuncture, amounts over Medicare approved amounts not covered by deductibles. These are all going to be things you pay for unless you go out and you find another policy that covers you, which in a sense you're still paying for it because you're paying for that policy then. But knowing what this list is, at least having a general idea, tells you what you need to go shop for. So that's why it's important. What private insurance may cover in full or part. Now, if you go get a Medicare Advantage plan, your deductible for Part A might be just wrapped into that, right? It's kind of, like I said, with that picture I showed you where it's all combined, it might just be wrapped in together. And that makes it simpler, which is nice. It doesn't necessarily mean it's cheaper, but it makes it simpler, which I do think is valuable. So you can see hospital costs after 60 days, you could build in extra coverage for that. You could build in some coverage for the 20% co-insurance that Medicare doesn't pay. Again, this is all going to be a case-by-case basis. These are your options to build in. And that's why Medicare Advantage is so popular, because you can do that stuff. Medigap, okay? Medigap, otherwise known as Medicare supplemental insurance. You'll hear those two things said. They're interchangeable. What that is, again, let me go all the way back, because the better way to talk about it is with the picture. This picture right here If you go with regular Medicare, getting a Medigap policy can add on coverage, supplementing the original Medicare coverage. Okay. And it's in substitute of going with the full Medicare Advantage where everything is combined together. So that's what Medigap is. It's an add on, it covers the gaps, hence the name Medigap. And it's just extra above and beyond. It can be a totally viable option. They can be standardized. Minnesota standardizes its plans differently than other places. So where you live can make a difference as to what your Medigap policy could be. And it doesn't work with Medicare Advantage. You're doing one or the other. You've either got Medigap or you've got Medicare Advantage. Again, most people here are going to get Medicare Advantage, I would guess, because that's probably what's going to be in your best interest. So you won't have to worry about this then. But if you have questions about it, let me know. Here is a sample breakdown of what Medigap could cover. I'm not going to go through all these items here, but just so you can see, this is why people get intimidated by it, because it gets complicated quick. Medicare Advantage plans, we talked a ton about it already. They're health plan options approved by Medicare, but run by private companies. Medicare pays the amount for each member's care. So it is still Medicare. Some people think, well, I'm circumventing Medicare. No, it's just our weird public-private marriage here that is not necessarily intuitive to understand. But once you do it, it sort of just works. And then you say, however it works is fine because it's working. That's in general how I tell people to think about it. Shop carefully. Again, you can customize a lot of the coverage in a potentially Medigap, or certainly a Medicare Advantage plan, right? So check that it's covering the drugs that you need to take. If you have a doctor in a certain network, make sure they're going to stay in the network if that's important to you. Again, if there's a hospital you like that's in your network is a big one. But procedures, if you get screened every year or every few years for some condition and that requires an MRI or something, try to find an insurance that will cover that versus every 3 or 4 years you have to bite the bullet out of your own pocket. I'm just making things up in terms of what is affecting you. We're all different, but you know what's affecting you. Try to get the coverage that fits you the best. This is, again, where a broker can really come in and make a difference because they can help shop for you, where you don't have to try to be an expert in all this stuff. So how do we plan for these costs? This is the last section. You've really hung tough with me. I really appreciate it. And again, if any questions are coming up, I hope I answered those first two great. Stick them in the chat, or we should have time at the end as well. Out-of-pocket healthcare spending by gender and age, okay? This is just what averages are, and you see it split by men and women. Here's where I got to that 5,460 number. Again, it's the one furthest to the left there. But as you get older, this is not going to surprise any of us, you're going to be paying a more significant part of your income towards healthcare, out-of-pocket healthcare expenses. Again, the blue is the premiums, the orange is all the other stuff, the services. So yeah, as we get older, we need more healthcare, potentially, probably, hopefully, I guess you could say. And it's going to cost more. And we need to plan for that financially to make sure money is there to cover that. A typical Medicare budget today, just again, this is a typical, so all of you are going to be different from this. But let's say you went the Medigap route. You went regular Medicare plus Medigap. Your premium might be $400 a month. And again, depends on what your Medigap premium, what your coverage is, all that. This is variable, so don't take this as gospel. But just to give you a sense of it, because I get that question a lot. Well, roughly how much am I going to be paying here? A typical annual healthcare budget. So premiums plus out of pocket. Okay. And again, this assumes, I would say, a relatively healthy person, in my opinion, where you should be budgeting $6,500 premiums plus out of pocket. Again, this was the Medigap example. But what can cause your health budget to change in the future? Well, the more you need healthcare, the higher your premiums could get because you might need fancier coverage. Your out-of-pocket costs might get more expensive just because of inflation, and those increases may be only somewhat covered by Medicare or Medigap. A change in your health status is usually the big one. If you get a really expensive drug prescribed to you and your drug coverage is not cutting it, that's coming out of your pocket. So again, we need to be proactive about this. We can't totally predict our healthcare, of course, but we want to get into a policy or policies that cover our bases, basically. We don't want overkill, but we certainly don't want underkill either. And then, planning for future health costs. So there's a couple different sources here. They're always going to be averages, so you can never take them to heart necessarily, but I'll give you a ballpark. How much do you need to have saved at the beginning of your retirement specifically for healthcare, not including long-term care? I don't necessarily look at your assets when I look at money and say, well, this much is set aside only for healthcare, right? But we do need to have money in the pot for healthcare. And this is what Fidelity and the Employee Benefit Research Institute believes is necessary, right? Fidelity is a little bit higher. They think for a couple, you need about 300 grand that you're going to end up paying or set aside at the beginning of retirement and grow to pay for overall healthcare expenses. It's not cheap. That's the point here. It is not cheap. We need to have a plan about how we're going to pay for this stuff. Talked a little bit about long-term care. I'm not going to go into that a ton, but know that skilled nursing care, there is no coverage after 100 days. The average person only needs it for 28 days, so that usually covers you. But the magic terms, activities of daily living, that's not part of Medicare. That's long-term care insurance. So again, go back and check out our long-term care, or if you're curious about that, we can have a one-on-one about it. But 35% of people over 65 have some limitation that Medicare is not going to cover. And here are all the causes. They're going to be the ones that you expect: cancer, heart disease, diabetes, arthritis, all sorts of things can limit what can cause limitations that require you to seek out care that Medicare may not cover, especially if it's in your own home, which is where a lot of people want it. Don't need help now. The way that I looked at this when I was looking at these slides, and I was like, I really hate the way this is worded because it feels ominous. But I'm not threatening you, I promise. Don't need help now, just wait, is what it says. I didn't write that. But percentage of persons with some limitations in activities of daily living by age group, and this is a study that was done in 2009, but it's going to be relatively consistent. By the time you're 85 and older, I think all of us know this already. If we have parents who have gone through this stage of life, you need help with something. Hopefully it's only one of these things. Hopefully it's minor. There are some people who need help with all of them, but know that Medicare isn't really going to foot the bill for this. We're going to need to have some other plan, whether it's insurance or whether it's out of pocket, having money available to pay for this stuff. So instrumental activities of daily living, these are the big ones. These are what kick in your insurance coverage if you have the long-term care insurance. Those are important. This is sort of definitional stuff. The main point I want you to think about when it comes to long-term care, Medicare is not the answer. We got to have another plan. That doesn't mean you need to have insurance necessarily. You could have assets that cover this. Maybe your house, the value in your house will cover it because you say, well, if I go into a facility, what do I need my house for at that point? Everybody's different there, but we need to have some sort of plan. And of course, there are different levels of care. I think we all realize that: in-home, out-of-home, management, rehab, all that sort of stuff. Here's, by the way, what these costs could be. These are somewhat old numbers. They increase rapidly. They depend on what region of the country you're in. Don't take them as gospel. They're just sort of rough estimates. But a private room in a nursing home, $300 a day is totally normal, if not more than that. So, and you may say, I'd love it if it was $300 a day. My, parent or aunt or whatever is in one that costs way more than that. Absolutely, it can. So I say this not to scare you. It sounds freaky when you put all that stuff in a row. It's just about having a plan for it. Okay. That's the simple truth of it. So 3 reminders: enroll in Medicare on time. Don't wait for that general enrollment period. Do either your initial enrollment when you turn 65 or the special when you leave the job that allowed you not to sign up at 65. Simple as that. Don't overcomplicate it beyond that. Shop carefully for private insurance to go with Medicare. Again, most of you are going to go on Medicare Advantage because it's going to be the best option for you, in my experience. Not because it's guaranteed to be that way, just in my experience. There may be somebody on this call or some people that say, I didn't go the Medicare Advantage route. I'm totally happy with it. It works great. Totally valid. I'm just saying, in my experience, the majority of people go with a Medicare Advantage plan, which again is offered through a private company. You can customize it a little bit. Go to a broker if you're curious to have them help you shop. Worst thing you can say is thanks, but no thanks. I'll do the rest on my own. And then all you're out is an afternoon where you went in and talked to them. Okay. So I recommend that. And then plan for costs, plan for long-term care costs, plan for out-of-pocket costs. This is not a get out of jail free card. I think we all knew that going in. So maybe I just talked about something you were already all aware of for a little bit too long, but I wanted to hammer home the point. Medicare is not a set it and forget it type thing. You need to continually re-enroll, and as your needs change, to make sure you're getting the most out of your coverage, and you need to have money set aside to help you pay for the stuff that will inevitably come out of your pocket. So, wow, we made it through. This is literally one of the longest presentations I've ever done, and I'm amazed that we got it done within an hour in terms of just number of slides. I did have to go quickly there. But any questions from anyone, all our contact info is up on the screen. The Gerbi at SteinFG is my actual direct email. Feel free to do that. Feel free to send it to the Stein at SteinFG. It'll get to the same place. Okay, I see a question came in. Let me get to it. Why are there penalties if you miss the sign-up times? It's a good question, because you'd think, well, if I'm not taking advantage of the system, why? The reason there are penalties, it's a political reason. The government wants you to sign up for Medicare unless you're covered through a work plan, because they're worried that you won't sign up for any health care. And when you need to go into, the emergency room, it's going to come out of the public dollar anyway. So they want you to be covered. So it's a little bit like they want everybody to be covered, because actually that's the way insurance is supposed to work. Everybody gets it. And then it spreads the risk over healthy people and at-risk people. Because if you think about it, if there weren't penalties, people would either sign up right as they knew they were going to have a major healthcare event, or they wouldn't sign up at all and then just have, either bankrupt themselves and then the government's got to foot the bill, which isn't good for either them or the government, or us taxpayers who are helping to pay for that, obviously. And it's not good for the person either, because they're neglecting their health potentially. So the reason there are penalties is just the same reason any insurance company would want you to sign up. It's to divert the risk over the most amount of people. Thank you, everybody, for being here. Again, feel free to reach out. Contact information right here. If anything comes up individually that you wanted to cover and didn't want to ask in front of the group, totally fine. Just send us an email, give us a call, whatever works. So thank you, everybody, and enjoy the rest of your Thursday here. Take care.